What if I told you two Nigerian banks are in a secret race to 100 naira per share, and one of them might double your money faster than you think? Are you in doubt? Now, welcome back to the channel. If you're new here, my name is Trader Kessie, educator, investor, and your favorite chartist. I help beginner traders and investors cut through the noise, trade with clarity, and understand how to actually grow wealth in the financial market. And I'm here so you do not have to learn the hard way. Today, we'll be talking about two of the biggest banks on the Nigerian Stock Exchange, GT Bank and Stanbic. And we are going deep into which of them is set to explode first. Stay with me. Now, the first one is GT Bank, and then the second one is Stanbic IBTC. Both of them are the contenders. Now, first, GT Bank is a big bank. Their new name, GTCO. Most of us are still used to their name, GT Bank. Then Stanbic IBTC is still another big bank, and both of these banks are solid. Both of them are currently trading below 100 naira, but one of them would get to the 100 naira mark before the end of this year. So let's do a side-by-side comparison. We'll be using their key metrics and then the technicals. Now for the key metrics, GT Bank and Stanbic, you can look at it carefully. GT Bank, as at today, 27th June, currently trading at 82.7 naira, 82 naira 7 kobo, with a 43 naira low and 84 naira week high. Then Stanbic IBTC is currently trading at 87 naira with a 52 weeks low of 52 naira and a 52 weeks high of 87 naira. Now, when we talk about 52 weeks low, let me throw more light on that. 52 weeks low for GT Bank is 43 naira. 52 weeks high for GT Bank is 84 naira. Then for Stanbic, the 52 weeks high is 87 naira. The 52 weeks low is 52 naira. So when we talk about the 52 weeks low, it's the highest and the lowest price a stock or an asset has traded in the past 12 months. For 52 weeks high, it simply refers to the highest price the stock reached or got to in the last year. For 52 weeks low, it is the lowest price the stock dropped to in the last year. So for GT Bank, it is 43 naira. Then for Stanbic, it is 52 naira. Now, these 52 weeks high and low gives investor an idea, a clue of the volatility, the stock price range, and then the momentum over time. Now, there's a whole strategy around this 52 weeks high and low, but that will be for another class. But currently, as we're looking at GT Bank, considering that their 52 weeks high is at 84 naira 95 kobo, and its current price is 82 naira 7 kobo, you can see it is almost close to the 52 weeks high. But when we get to the technicals, we'll break that down. Then for Stanbic IBTC, you can see the 52 weeks low is 52 naira and its 52 weeks high is 87 naira. So currently, it is sitting on its 52 weeks high. That's for Stanbic IBTC. Now, we'll be diving into some other key metrics, such as their market cap, float, interest, dividends, and all of that. Stay with me. Okay, now let's consider some of these data. We'll clear out all of the drawing. Now, this is for GT Bank. and then this is for Stanbic. Now, I want to show you something. The market cap for GT Bank is currently trading at 2.8 trillion naira. I'm going to show you a simple formula on how that is gotten. And then for Stanbic, the market cap is 1.3 trillion naira. Now, when we say market cap or market capitalization, like other investors like to call it, it is simply the total value of a company's shares present in the stock market. So it tells an investor, or it tells us and every other person who are currently watching and looking at the stock market, how big or how small a company is in the stock market. So it helps us also compare the company side by side. For instance, GT Bank, which is a 2.8 trillion naira market cap, is bigger than Stanbic, which is a 1.3 trillion naira market cap. So for bigger companies like GT Bank, they are more stable. And then for mid-cap companies like Stanbic, they grow faster and they can also have crazy volatility when it comes to market runs and all of that. Now, so there's another key information I want us to look at, and this is it. The shares outstanding. The shares outstanding for GT Bank is 34 billion. And then the shares for Stanbic is 15 billion. So when we talk about shares outstanding, it is simply the total number of shares a company has given out to investors, including their founders, the institutions, and then regular people like me and you. So it's just like when you share a food in a family, when you share a food, there's the one for the father, the one for the mother, the one for the children. The totality of those food, the combination of those food is similar to these outstanding shares that a company or a stock present or listed in the NGS currently possess. So for GT Bank, it is 34 billion shares. And then for Stanbic, it is 15 billion outstanding shares outstanding. Are you getting it? Now, the reason this is important is it helps us to determine the market cap. Remember, if you're looking at this, you will see that there's no market cap for GT Bank and there's no market cap for Stanbic. Now, let me show you the formula to get your market cap. Now, I was saying something about the shares outstanding. I said it helps us determine market cap. Now, there's a formula for it. The share price multiplied by the shares outstanding would give you your market cap. The share price multiply by the shares outstanding would give you the exact value of the market cap. Now, for GT Bank, how many of you still remember the price? 82.7, right? Or approximately 83. As you can see, on June 26th, 2025, currently trading at 83. Now, 83, which is the share price, times or multiplied by the shares outstanding, which is 34. You can punch your calculator. Let me allow you to do that. 34 billion times 83. You will get 2.8 trillion. So that is how GT Bank market cap is 2.8 trillion. You can apply the same formula to that of Stanbic. For Stanbic, the current price is 87. 87 multiplied by 15 billion, you get, let me allow you punch it in your calculator. Are you done? The answer would be 1.3 trillion market cap. So you can see already that the market cap for GT Bank is bigger than that of Stanbic. Now, let's also compare the trading volume. You can see the trading volume for June 26th, 2025. You can see the trading volume. You can see. And then you can compare with the same date trading volume for Stanbic. You can see that of GT Bank is far greater than that of Stanbic. This is a collection of data in the last 7 days. June 26th, 25th, 24th, 23rd, 20th, 19th, and 18th. So these shares are standing, help us determine the market cap, like we've just calculated now, because the more shares a company has, the harder it is for the price to move in a volatile manner. And this is also a key for understanding earnings per share and dividends. I would explain earnings per share in another class, but I would explain dividends. Now, when we talk about dividends, it is, as a matter of fact, last month, in the month of April, May, GT Bank delivered dividend to their investors. The dividend for GT Bank is about 8 naira per share, and that of Stanbic is about 5 naira per share. So when we talk about dividend is simply a portion of the company's profit that is given to the shareholders. It can be shared every month, every quarter, or every year. For most of the Nigerian stock, they do theirs every year. Just this year alone, Dangote Cement has delivered, Stanbic, IBTC, GT Bank, Wema, and a lot of the companies. And it is another cool way to make money, but I'll talk about that. So GT Bank is currently paying 8 naira per share in recent dividend, and then Stanbic paid about 5 naira per share. Now, so if you have about 10,000 share of GT Bank, you would get, as a dividend investor, you would get 8 naira per share multiplied by the 10,000 shares that you have. That would give you over 80,000 naira as your dividend payment. So this is what company do. Part of the profit they make, they will share it to other investors. And that's why, as at last week, CBN brought their forbearance policy to all of the banks who are under forbearance, stating no dividend payment, no bonus, and all of that. I did a video on that. You can check it out. Now, why dividend is important is like a thank you gift for customers or investors who are sticking true in hard times and in easy times with the stock that they are currently holding. And it is good for passive income because it's a source of passive income revenue, source of revenue for long-term holders or long-term investors. So now, let's talk about the float. Now, the float for GT Bank and the float for Stanbic, I will show you something. The float for GT Bank is as at 2024. For 2024, the float for GT Bank is 34 billion. And then for Stanbic, it is 4.16. You can see the approximately 4.16, and then this 34. This is the visualization. The float shares are standing for Guaranty Trust Bank. Now, when we talk about float, a number of people confuse it with shares are standing. So remember the illustration I gave us about shares are standing, where I said a portion of food for the father, the mother, and then the children. Combination of all of those food is what we call the shares are standing. Now, if we keep that of the father away and keep that of the mother away and say, okay, this is for the children alone, it is called float shares. So float is like your regular shares that a company has issued to the public to say, okay, go and do business with this, go and trade with it. So it is that regular shares that a company has issued to the public that is therefore available for investors to trade with. So that number of shares are available to the public to buy and to sell, to do business with. That's your float shares. So based on the analogy I gave, when you reserve that of the father, reserve that of the mother, the one for the children is the float share. When you bring all of them together, including the father and the mother, it is what? The shares are standing. So for GT Bank, you would observe that their float share is 34 billion and that of Stanbic is 4.16 billion. The price disparity is much. So GT Bank has a higher float and Stanbic has a lower float. For GT Bank, the higher float simply means there are a lot of shares that are available for the public to trade. And then for Stanbic with a lower float, it means that there are few shares available for the public to do business with. So the reason this is important is a company or a stock with a low float can rise faster because few people are doing business with it. It will create demand because of its scarcity. And then for companies with a high float, they are more stable, right? So it takes a little while to see them move. It takes an extra pressure to see them move. But a company with a lower float, it takes little pressure to cause any volatility. Now, let's head over to their technicals so we can look at them from the chart perspective, having looked at all of these key metrics. Now, for the technicals, we'll be starting with GTCO. Now, for GT Bank is currently doing a higher high, and that means it's currently in an uptrend. But it's also taking a breath. You know, when market wants to move, just the same way we breathe in, we breathe out. We breathe in, we breathe out. The market does the same. When the market is moving up in an upward direction or uptrend, it goes up. Let me draw it. It goes up and pulls back. Goes up, then pulls back. Goes up and then pulls back until the trend breaks. Now, for GT Bank, you would observe this was the last time in 2018, price made a rally up, came down, and in the year 2024, price did an attempt to come back to this resistance. Resistance is like a ceiling. Those places where village people say, hey, you are not going to cross, so, right? So price made an attempt in 2024, pulled back a little. Remember where I said price goes up and down, pulls back a little, and then gathers enough momentum and clears the resistance. So as we can see, GT Bank is currently at 82 naira 50 kobo, almost close to the 100 naira mark. Now the question is, would GT Bank take a break and rest for a while before continuing the race, or will it just pump to this 100 naira? So this is what investors are currently looking at and why we are doing a comparative analysis between GT Bank and that of Stanbic. So let's head over to the Stanbic. Let's look at the Stanbic. For the Stanbic, you would see that price broke through this resistance of 2021, made an all-time high, right? Made an all-time high, and price, this is the all-time high, and price came back to test this support in 2024, and since then, it has been pumping up. So these attempts currently, where Stanbic is at 87 naira, is the first attempt of crossing this all-time high. The deep question again is price going to shoot up to 100 naira, or price is going to take a break and that's okay, let's relax a little before moving upward. So from a technical perspective, you see that GT Bank and Stanbic are running massively to the 100 naira mark. It's as though both of them are in competition, right? So that's why I'm taking my time to show us this chart so we can see. Because Stanbic just broke this resistance already. More like it's pushing through all of the resistance, all of the ceiling, all of the things that are holding it from not advancing. So buyers are actively aggressive. So combine these particular technicals with the knowledge of float that I've shared and the dividends that they have done. You have your bias, I have my bias, but let's continue. So the big question is this: which of them is going to hit the 100 naira first? Is it Stanbic or is it GT Bank? If you're looking at pure size, GT Bank would win and get to the 100 naira first. If you're looking at potential speed, price growth, low float, Stanbic Bank might probably just take the run to the 100 naira faster. But we must remember that investing is not just about guesswork. It is about understanding what drives price, intention, and it is that intention that we act upon as investors. So these two stocks would likely give you profits and double your money before the end of this year. So our eyes on our both of GT Bank and Stanbic. So drop your comments, drop your thoughts in the comment section concerning which of these bank would hit the 100 naira price mark first. Thank you so much for watching. And if this video has helped you understand stock investing in a simple and comprehensive manner, please go ahead, hit the like button, subscribe, tap the bell icon, and don't miss any of our video lessons. And until we see again, stay profitable.